It's time now for Business. We say hello to Yuka Royer.
Hi, Francois.
And we talk about the gaming giant EA going private thanks to some Saudi help, including a man who's going to come up in conversation in the next hour, Donald Trump's son-in-law, Jared Kushner.
That's right. Well, EA, or Electronic Arts, announced that it had entered into a definitive agreement with a consortium made up of Saudi public investment fund PIF, Silver Lake, and Affinity Partners, that's owned by the son-in-law of US President Donald Trump. The $55 billion deal is the largest leveraged buyout in history, while PIF is rolling over its existing 9.9% stake in the gaming company. A significant portion of the purchase is financed by borrowed money. Existing shareholders will receive $210 per share, a 25% premium over the stock price at last Thursday's market close. When EA first started trading 36 years ago, its stock was valued at a mere 52 cents. Today, the company is a big name in sports games such as Madden NFL and EAFC, which used to be called FIFA, but also other popular games like The Sims and Mass Effect. Even though it will transfer its ownership, it will keep its management structure, with CEO Andrew Wilson remaining in his position. Here's what he has to say about the buyout.
This moment is a powerful recognition of EA's remarkable work. Together with our partners, we will create transformative experiences to inspire generations to come.
And the deal, by no means the first foray into gaming by the Wahhabite kingdom.
For Saudi Arabia, well, the oil-rich nation has been making inroads into the sector in recent years. Saudi Arabia has hosted events such as the Esports World Cup and is preparing to host the first edition of the Olympic Esports Games. Earlier this year, the investment fund bought Niantic, the company behind Pokemon Go, for $3.5 billion. That became a part of Scopely, the maker of Monopoly Go, which had been bought by PIF's subsidiary 2 years prior. Here's a quote from the fund's deputy governor.
PIF is uniquely positioned in the global gaming and esports sectors, building and supporting ecosystems that connect fans, developers, and IP creators.
Well, the acquisition is scheduled to be closed early next year, and EA will cease to be traded on a public exchange then. Its shares jumped on the news today on the Nasdaq, up almost 5% from Friday's close. Wall Street on the whole is a mixed bag, with the Dow Jones just below the flat line, the S&P 500 and the Nasdaq extending Friday's gains. Major European markets were little moved this Monday, with London, Paris and Frankfurt all closing up by slightly more than 0.1%. And
earlier this month, Donald Trump rattling the tech sector with his $100,000 visas. China trying to seize the occasion.
Well, China will launch a new visa program for skilled workers on the 1st of October. That's this Wednesday. First announced in August, the K visa targets young foreign graduates in the science, technology, engineering and maths fields. It will offer longer stays, multiple entries and employment without sponsorship. So could this and other similar programs take talent away from the US? Luke Schrago and Brian Quinn have this report.
For China, it's a chance to boost its geopolitical clout and hoover up talent that the US no longer seems to want.
To promote international exchanges and cooperation between Chinese and overseas scientific and technological professionals, China has decided to add the K visa to its ordinary visa categories for young sci-tech professionals.
It's similar to the US's H-1B visa program that now comes with a $100,000 fee, making it cost-prohibitive to all but the wealthiest potential applicants. And Beijing's effort, without the requirement for a sponsoring employer, could go further still to draw in potential applicants looking for an alternative to setting up in the United States.
Research scientists who are working particularly in technology, that the U.S. is not going to be able to hang on to them. And this isn't just Chinese. I mean, this is all over the place as well.
The real victim is us. It's us, because we're sending our talent, our innovation abroad to our competitors.
There are still questions over just how successful the K visa will be. So far, there are few details about financial incentives. As with other programs Beijing has to draw Chinese talent back home, or residency and family sponsorship. What's more, language could be another barrier, with most Chinese tech firms operating in Mandarin, something that could send potential applicants to other countries. South Korea, Germany, New Zealand and the UK have all been either loosening visa rules or doubling available slots for skilled workers.